Welcome to Matters Financial and Geopolitical from a Frontier. Thank you for stopping by. It's been an incredible 48 hours. I'll deal with that in a moment. Let's move on to the currency markets where we've seen plenty of action. Oh my goodness. Back to the good old days. 1994, Tesla crisis. 97, 98, you might have forgotten that. Lehman. The portents, that's why I'm in that sort of ogre type way of thinking. But let's have a look at it. Euro dollar 1.1136. I've been bearish for eternity. We're now breaking down. Dollar index 98.25, fresh 2-year high. Japanese yen not making a move, but the target for me here is 114.50. Where are we? 111.89.40. Swiss franc, which has really in many ways led this move higher in the dollar. That's at 102.17. Pound, let's have a look at that. 128.72. 130 was defended for eternity, you will recall. Gone. Australian dollar, about which I am so bearish. Let's have a look at that. The Aussie dollar just above 70. It's cracking. It's going straight down. India rupee, problem, double whammy, oil price over 70. South Korean won, 1160.785, horrendous GDP and economic growth numbers. Brazilian real, 399.13, Egyptian pound, steady as you like, 17.1815. South African rand, about which I've been signaling it's in a problem. Last time I looked, 14.47, but this rate we're going to be over 15. Dollar index closed at its highest level in 23 months, and we've just set fresh highs. This is a chart from Charlie Bilello. I said a few weeks ago, this is a rocket ship on its way to Mars. We're back below zero with the German 10-year bond yield. Confirms the disequilibrium. Euro dollar, this is from T Commodity, hits the lowest level since 2017, last trading 111.34. It's a replay of a chart from many years ago, and we're going to break down big time, and of that I'm sure it just took a long time to play out. And in fact, if you look back at that chart, you'll see this 110, 114 level held for a great deal of time. The Australian dollar, I've just put in brackets, going, gone. Last at just above 70. The FANG custom index, this was interesting, versus the S&P ratio with upside daily DMARC sequential countdown 13. From November low up over 17% versus this S&P. Typically relative outperformance peaks here. What Tommy Thornton's talking about is an outperformance of the NASDAQ versus the S&P and saying this normally is peak outperformance. I don't think so. I think the NASDAQ's going higher. Boeing abandons outlook, takes a $1 billion cost hit in the MAX crisis. Share price, revenue fell 2%, 22.92 billion. That was not bad. I thought this wasn't too bad, actually, given the situation, but maybe it hit right at the end of the quarter. But I wrote about this, and I was very critical of Boeing because I said they displayed a lack of touch and finesse. It took 7 days to make a response, and then it was a written one. Just incredible. Gold. Now that had a little bit of a bounce, notwithstanding dollar strength, but I think that's all about tail risks and uncertainty. 1277. Don't think it's going to hold here. Crude oil is being squeezed. $66.19. The squeeze is on. Looking for yield. Yield of Argentina's 100-year dollar bond jumps to a fresh high of 10.3%. The very fact that Argentina could sell a 100-year bond speaks to the disconnect in the markets, particularly at that time. The Turkish lira depreciates to October lows versus the greenback. That's in the firing line. If anything's going down, that could go over 7. But you've had a big move already, but buying some puts there makes sense because you could have a discontinuous price move.